What's up, everybody? Hope everybody's doing well. Wanted to record this, not really lecture, but wanted to make a short kind of video talking about a pattern that you'll see in the market consistently, and it's one that, obviously it's not going to be one that's always going to play out, but it can give you good opportunity to get into the market, and potentially be on side. Um, of the market and catch trend moves and catch these big moves. And even though maybe you don't catch like a huge move, maybe it starts to retrace back on you, you're able to at least, take partials, get some break evens. Overall, it gives you a good entry into the market whenever you see this setup occur. So the setup and the pattern that we're going to be talking about is a swing failure. You might have heard this before, called SFP, whatever you want to call it. What it is it's a time in the market where the market makes a swing point, returns back to that pretty heavy swing point, okay, trades below the swing point, and then closes back above, and then continues trend. Okay, so I'm going to show a few examples here. You can find this on all time frames. I'm just going to be on the daily, but you can find this in every time frame, and we'll just go through this. So I'm using Euro USD here as an example. Obviously, you can use any asset you want to, but we're going to go over Euro USD here. Looking at Euro USD, you can see we had choppy price action around here, kind of just consolidating, not moving anywhere pretty much, not really creating any clean displacement moves, just shopping around. We finally start to get a move and we kind of create a swing point in the market down here. Okay, so you can see we had choppy price action all throughout here. We finally start getting displacement down and we make a swing point in the market. All right, so obviously if you're looking at this, you can clearly see this is a swing point. Okay, price then starts to trade higher, retraces, has one more move higher before trading back down to where? That swing point, that previous swing point we made before we started trading up higher. Okay. Now, if Euro USD was bearish, when we traded down here, Euro USD, if it was truly bearish, a bear, you would want to see a close below this swing point. If you saw a close below this swing point, this would indicate a potential lower low being formed underneath the swing point that caused the initial move higher. Okay, but price didn't do that. What did price do? It came down, traded right below this swing point, and that daily candle that traded down below that swing point, you can see it closed back above the previous, or sorry, it closed back above the swing here. Okay, so this is going to be your swing failure. All right, you can see the next days after that. What happened the next day? Big green candle, retrace back into this inefficiency here. You can see a continued trend. Continued overall trend, I should say. Okay. So if you look at the overall trend, you zoom out on the weekly, obviously the trend is bullish. The trend was bullish here. You can just see it on the daily, right? We have consolidation, move higher, consolidation, move higher, consolidation. We make a swing point in the market. Still kind of consolidating. We run that low. If we were bearish, what should price have done here? It should have traded below it and closed below this low here. Okay. I want to zoom out just so you can see this a little more. Okay, and see how clean this major swing point is. You see we have a swing here. This is a pivotal swing. Why is this a pivotal swing? Because this was the start of this move higher. All of this is just nasty consolidation. Okay, then we start to get a swing point here, or you can call it here, and we head higher. Okay, so all of this is internal structure. These are our big swing points here. Consolidation, nasty structure. We come down, we make a swing point in the market. What does price do? Consolidate, comes down, attacks that swing level here. If price was bearish, we should have closed below. But a lot of people don't understand that, and they see price heading down, down, down. Oh, price broke below an old low, so we're going to sell that. That's the whole point of this move, is to trick and activate those sell stops. People are selling short as they see this move in the market, but in reality, this is just a swing point. Price came down, swing failure, closed back above the previous swing, and continued the ultimate trend. Like so, consolidation, major swing level, continue, 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 swing level. We start to slowly chop. You can see it's slowing, starting to die down. We make an overall swing high. If price is what? If price is bullish, what should we hold around these levels here? What does price do? We take that level here. I believe we took that level. Let me zoom in so we can see. Did we take this level? We did take this level. So this could be a short-term trade. You can see this was our major swing point. Swing failure. It led you higher. Ultimately, we did come back down and we closed below that level, telling us what? Trend is flipping bearish. Okay, so that's how you can use these swing points to get in. This is a clean example of one. This was a major trend you could have caught off of this swing failure. Clean pattern here, right? You could see here we have a swing. This was a clean one here. Price, what did price do? Came to the swing low, closed above it. The next day, you can anticipate green price action. Okay, whenever you come down and attack these swing levels, and you get the candle close above, usually you'll follow back within the trend. Now, ultimately, we did come back down, yes. But this is what I was talking about at the beginning of the video. It gives you good entries. It gives you time to get into a good position to where you can manage it, and to where if it starts trading back down, then you can take your partials, you can get out break even, etc. Okay, but you could see here, as soon as we kind of broke that level here, that kind of activated, or not I don't want to say activated, but started to make a more bearish trend here, right? More bearish trend, and overall we made a lower high from this major high here. You could see lower high here. It continued that trend down. That's when we started that major downtrend. Okay, so it's important to understand your actual big swing points. It's just not any little major swing. Like if we go to the weekly, you can see this a little more here. So if we go to the weekly time frame, you could see those levels we had marked out. Let me go ahead and mark them out on the chart again, just so you can see them down on the weekly. So this was our major level there that we were looking at. Go back to the weekly. So you can see here on the weekly, let me remove that. That daily level we had marked out, you could see that is an obvious swing right there. What did price do on the weekly? It attacked that swing and ran higher. Okay, so you see that a little better on the weekly. None of this in here was that high, that important swing level. You can just see that, right? The weekly kind of confirms it a little more. You can see this was a very, very visible swing here. Attacked it, swing failure, continue trend higher. Okay, and you can do this. You can do this. Let me remove this. You can do this both sides, right? It's not just bullish scenario. I can show you a bearish scenario here as we're trending down here. So you can see we're trending down. We make somewhat of a swing point here. Kind of the same example here, right? Where price, and this is on the weekly time frame. Again, you could do this on other time frames, like the 4 hour, like the 1 hour. But you can see we come down, we come up here, and we know the trend is bearish. Okay, obviously we know the trend's bearish here, and we come up and we take out this swing high here. So we trade above that swing high, but what does price do? Trades above it, closes back below it, and what do you get from there? You get the continuation of that trend. Okay, so that's your swing failure, where you go above a key swing level. So I would say this is a key swing level. We can go about it on the daily time frame as well, so you can see it a little more cleaner. So this is your daily level here. Price comes up, takes out that daily swing level. People are going long, thinking this is a breakout of the swing, but you can see price closes back below. And then what does it do from there? Continues that ultimate trend that it's on. Okay, so you'll see this a lot. This pattern is one that plays out constantly. If we'll go to the 4 hour, maybe I can find a recent example. 4 hour here, few examples here. You can see we made some swing lows in the market here. Price goes below these swing low levels here. What is price failing to do? It's failing to close above. Okay, it's failing to close above. People are going short here, but in reality, this is just a swing failure, and this is on the 4 hour time frame. Price failing to close below this major swing level here, and then continues that trend. Did it again here. Swing level, price coming down, taking out that swing low, failing to close above. Next two candles continue higher. Okay, very, very clean, very, very plays out. You know, a lot of the time, does it play out? Does it give you like massive moves every single time? No, but that's where, risk management comes into play. And you got to understand, the overall narrative bias of the market. That's also important to kind of understand as well. So if you were like bullish on your USD, for example, and you were looking for a swing failure here, you would want to see this low, this swing point here. See what if as the price is trading down to it, you want to see price hold above that level here. Okay, if you're bullish. All right, and that's what you would look for. Same thing kind of here. You see that played out there. We can find maybe a bearish example here on the 4 hour time frame. This is somewhat of an example here. Not the best example as we did close above, but it is an example. So this is a major swing point. Obviously you can see it's a major swing point because from this swing low to the swing high, you can see we pushed down pretty far here. Okay, so that's a major swing point. Price attacks this swing level here, and then you can see we displace lower after we kind of sit in that area for a while, ultimately closing back below. Okay, so people see this big energetic move higher. They see we're going above this high here. If we go to the daily, see where this daily high is at. We're over here. Yeah, right here. You see this is a daily key level here as well. I don't know if was this the one we just showed? It might have been the one we just showed. Yeah, this was the one we just showed, I think. But yeah, you can see obviously key level here. 3 big days of green, right? People are buying this breakout here. People are buying as we're breaking above this swing level. But in reality, the trend's still bearish. We get the closure back below, continue that trend. Okay, so going back to the 4 hour, how could you have gotten entries here? Well, obviously you could probably get a clean entry on the hourly somewhere. So you can see this was our major level. Sorry, price coming above it. People are buying this huge breakout. They see all this, green volume coming in. But in reality, the retail traders, the retail mindset, I don't want to say retail traders, but the retail mindset, they're buying this. Okay, they see this green energetic move. They're buying, and then they get smoked. Why they get smoked? Because this is a swing failure. Okay, institutions, they're selling into that retail mindset, breakout, buy. They're selling into that. And then you have a lot of opportunities to go short on any kind of retrace. You can see we move down, retrace back up into here. Could just go short there, retrace back up, short here. Few opportunities to go short, retrace up there, go short, etc. Okay, so that's your swing failure pattern. And the higher the time frame, the better. Usually what I like to do is, clear example what I just showed you. I like to use the daily time frame. Those are usually my A+ setups. So like this, for example, is I would have this, if I'm bearish on Euro USD at this time, and I see price coming up to this swing here, I want to see what price does to this level. So I'll wait for price to go to this level, then I'll be on my hourly chart, and I'll see price, as soon as price starts to displace lower and we get that aggressive move lower, that's when I'll get into action. Okay, so I like using my daily levels, but I'll go down to the hourly 4 hour to get like an entry. Okay, so I hope that makes sense. Clean example here. I don't know if this was one I showed or not. I don't think it was. Maybe it was. No, I don't think this is one I shown, right? Yeah, I showed one over there. So there's another example here. Right, swing low in the market. Big energetic move. Big move down, taking out that swing low, closing back above. What do we get? Continuation. Continuation uptrend after failing to close below this major swing level. And this is a major swing level. Why? Look at the structure. Again, it's important to understand structure. Okay, swing low, swing high, swing low, swing high, swing low, swing high. I like to say this is consolidation. So we have yet to make a really important swing level. So this is consolidation to me. I don't look at this as an important swing low. Okay, so this is consolidation, swing high. We get a manipulation move below this consolidation. So this now is your important swing low. Come up, make a swing high, come down. We make swing low here. We have a move higher. So this is your important swing low now. Move higher, move down. Do we close below this important swing low? No. Do we go below it? Yes. Do we close back above in the range? Yes. What is that? A swing failure. Now you're looking for buys. This is your point swing low. Come up, swing high, swing low, continuing trend, continue down. This is your ultimate weekly low, obviously. We never broke below it, and we're continuing that, right? And then once you kind of get that break below these levels here, that's when you start to get that more long-term downtrend there, midterm, I guess. Okay, so that's how you can look at these important key levels. You want to make sure they're actual important swing points, impulsive, big swing points in the market. Okay, not just tiny swing points, right? This is an impulsive swing point in the market. Where's I looking at? Over here, yeah. This is an important swing point. You can see that from at this level, look at the energetic move we got. 1, 2, 3 days. It's probably like 200 pips, maybe more. I don't know. I would have to get my measuring tool, but huge move here in the market, right? So at this level, huge energetic move. We know this is a very important swing level. Come down, retest it, swing failure. Okay. These lows down here, these are not important. These are not swing points, right? A lot of people look at this as swing points. This is just consolidation mess to me. Nothing important here. Let me get this move. This is an important swing point to me. Okay. If price would have came down to this low, we didn't. But if price would have came down to this low, just for an example, and we retested that low and closed above, that would have probably been a sign that we're probably going to head back up. Because this is an important swing point. At a swing failure, we're probably going to have some sort of short-term move. Maybe we do something like that and then ultimately we come down. But that gives me an idea we'll probably have some sort of move higher. Okay, so I hope this video helped in regards to kind of finding swing points in the market. One, hopefully this helped with multiple things: market structure, swing points in the market, and also just understanding how powerful swing failures can be. You can see kind of here, took out this low here, and we started to get that ultimate trend, right? This one's a little iffy though, because we did close below it. If you want to go to the weekly time frame, you can see here we didn't. So this would have been kind of a good weekly outlook here. This is a very big swing level on your USD. As you can clearly see, at this swing level we saw, I mean, this whole candle almost got, almost had a whole move up and reversed to a green candle. So we know this is a big level. We came down here, went below it. People are going short here. It's crazy to think about. If you've been trading for a while, it's crazy to think people are going short here at the bottoms. That's how the retail mindset works. So people are going short here, saying, "Oh, we're going below this major level," but in reality, swing failure, close back above, consolidation, continue higher there. So yeah, hope this video helped. If you have any questions, feel free to leave them down below. I'm telling you, you'll see this all over the market. It's everywhere. I mean, another example, I can just mark out examples all day, right? Swing high there, swing failure there, right? Again, this is one we talked about here. And this is on all time frames. You can look on the hourly, 4-hour. You'll see it everywhere in the markets. It's everywhere. So just find your key swing levels, mark them out. You'll see it happen, okay? If price is bearish, there's a good chance price will trade up to the highs, trade up to a swing high, take out that level, okay? Take buy stops. People are buying that breakout, close back below, and you'll get an entry for short. I'm telling you, you'll see this play out over and over and over and over. Now, is it going to work out in your favor 100% of the time? No. But that's where risk management comes into play, where you're managing your trade. Maybe you're taking partials. Maybe you're moving your stop to break even as price is starting to reverse on you. because the example I showed here, if I can find the example I showed, it goes over here, right? Sorry, I want to find the example I showed because that was a really good example. I think it was over here. Yeah, this was it. So the example here, this was not a, this is an obvious swing low, right? Swing low here, swing high, swing low, swing high. Obvious swing low here. What did price do? Oops. What did price do? Came down, took that swing level, closed back above. So here you're probably looking for buys. Let's say you get in a buy somewhere down here, your stop's below here. So you would look something like this. So let's say you get in a long somewhere here, your stop's below this level here, somewhere here, I don't know. And you're targeting, let's say we're being a little, ambitious, and we kind of wanted to target somewhere in this gap here or something like that, right? This was obviously a big trade if it were to play out. Sometimes you'll get these to play out, but in cases you don't, this is when you go break even, you take partials. So if I'm going back to look at this, or if I'm sorry, if I was in this trade and I was looking at it as it was playing out, let's say I was checking it one day or some hour of the day, and I see prices in my direction, but we start to kind of get a pullback here. Maybe this is something that makes sense for it to pull back a little, but obviously, if you want to see price head to your target, you usually want to see it head there pretty smoothly and make sense, right? So you can see we came down to this down close candle. We started to hold that level, but once you start to see a little, let me delete this. Once you start to see a little weakness in the market here, kind of holding up at this key level, that's when you can start to take partials. Okay, so going down to the 4 hour. Let me go to the 4 hour here. Hopefully I can find where I was at. Should be over here. Yeah. So going down to the 4 hour here, you can see maybe you got in, let's say you got in long here, right? So you saw the swing failure, you got in long here, your stops below here, and you're targeting, maybe you're targeting up here, okay? So you're in the trade, right? You get tagged in, it's looking good, you're not stopped out, going your way, going your way. Then you kind of get this big down close candle, right? You start to get this big down close candle. You let it play out a little bit, heads back up to this level, and it's failing to break and make a new high. Okay, so you see on the 4 hour time frame, you have this low, you have this high, you have this low, you have this high. You're looking to create a low. Price is trying to come up, break past this high. This is what you would want to see if you're going to head towards your target, and you don't get that, right? You're failing to kind of get that move higher. Okay, that's when you can start to take partials. That's when you can start to move your stop to break even or in profit or something like that. Okay, obviously, every swing failure pattern isn't going to play out just like this, for an example, but it gives you a good entry into the market to where you have time to potentially manage your position, take partials, or get risk free. Okay, you just don't get into position off a swing failure and you think it's going to play 100%, right? It's important to also manage your position. So even if you would have got long here, you want to, you're trading the market. You're not trading in hopes and dreams it heads to your target, and this is not some magic tool that's going to make you profitable. What's going to make you profitable is trading the markets and actually trading the candles rather than hoping it goes to your area. So you can see here, price started to weaken. We failed to really continue this 4 hour trend we started to move, or we started to have. We made a new low, a higher low, and then here, right here, this is when I would start to look at my position and be like, okay, we're looking a little more bearish here. We might head back down. I'm going to take some partials off the table, or I'm going to move my stop to break even or something like that. So that's a quick example of, I want to show those examples and be realistic. Okay, that's a realistic example that can obviously happen where you get in a swing failure, you get in a clean position here, it starts going your way, but ultimately it heads lower. Okay, but that doesn't mean you can't make profits off of this short-term move we did have. That's when you take your partials. That's when you move your stop to break even, whatever you want to do, when you start to see that structure go against your bias or idea. Okay, we can all have ideas and bias, but if the candlesticks are telling us otherwise, I would want to start managing my position, right? So I hope this was helpful. Hope it gave you kind of an understanding of this pattern. You'll see it everywhere. I'm telling you, you will see this pattern play out over and over and over again. It's one of my favorite patterns, one of my favorite things to trade. Um, and I would say, it could be a high probability. It can give you a high probability setup. Okay, that doesn't mean you're gonna get some crazy RR trades um, every single time, but it gives you. I look at it as getting into the market at a good entry and at a good level. And if I have to manage my position where I get stopped out break even, or if I have to pay myself a little earlier where it doesn't hit my take profit, I'll be way happier doing that than getting in at random spots, losing consistently, etc. So, hope this was helpful. Hope you guys found something interesting in this video. If you need anything, feel free to DM me on Twitter down below in the description. Join my free Telegram, and I will see you guys in the next video. Peace.